These signals are provided for educational purposes only and should not be treated as investment advice.
This is Haskins with the Forex Training Professionals with the logic behind the trade alert issued in the live trading room. We issued a trade alert to buy the CAD CHF pair from 0.9680 plus spread, from 0.9680 plus spread with a 50 pip stop and with a 100 pip target. I'll give my explanation on why we chose this pair, what's the reason behind the entry level, stop loss, and take profit level. When we looked at the currency meter at 11:30, we realized that the Canadian dollar was beginning to strengthen up, and the CHF was beginning to weaken at that particular point in time. Looking at various level time frames, we reached the conclusion that perhaps the CAD CHF pair might be the best pair to trade compared to all the other major crosses. So we looked at the CAD CHF 5-minute chart. It did not give us much of an chart pattern or a candlestick pattern. We then looked at the 15-minute CAD CHF pair, and the 15-minute CAD CHF provided us with a morning star reversal formation. The morning star reversal formation right here. And the morning star, the body of the morning star was at 0.9680. So that's the price which we noted on the 5-minute chart, 0.9680. Apart from that, we did a top-down analysis. We looked at the CAD CHF daily chart. The daily chart was very interesting. We were in a uptrend initially on the daily chart, and then we currently are in a downtrend. But in this downtrend on the daily chart, we are making a reversal formation, and this is the railroad track reversal formation. A railroad track reversal formation, and the exact price of the body, the upper end of the body of the railroad track formation is 0.9680. So we note that again on the 5-minute chart. So we get this level from a different price in history. It's not the same price which we saw on the 15-minute chart. On the 15-minute chart, we see a morning star formation at the body of it is at 0.9680, but that's a recent happening. On the daily chart, we look at the same price level but of a different historical price and a historical candlestick formation. So 0.9680 becomes a very important level. We went further down to a 60-minute time frame, and on a 60-minute time frame we saw this hammer formation, which is a reversal formation, and the head of the hammer coincidentally was at 0.9680-ish handle. So all said and done, 0.9680 might turn out to be a significant support level, um, with a potential change in the direction on the daily chart, and decent room to go numbers. Now let's examine why we chose a 50 pip stop loss. The best stop loss would ideally be um, below these daily lows, but that's a bit too far away for my trading comfort. The next best stop loss would be below this daily low, which is yet a bit far away for my trading comfort. So then uh, we need to outweigh the risk and the reward of keeping a tighter stop loss, and we examine the 4-hour chart, and on the 4-hour chart, the wick of this doji which is being formed is the lowest point of that is 0.9634. So this turns out to be the tightest level of stop when compared to the other three, though it's not the best level of a stop loss. But sometimes we have to weigh the consequences of a wider stop versus a lesser stop, and we've reached the conclusion that a 50 pip stop loss, if we enter in, I'll show you the 5-minute chart. If we enter in at 0.9680 with a stop loss below these lows, should be decent enough to keep us into that trade. And for our take profit level, um, we expect price to go right up till 0.9813, but like always, we do not want to be the last people standing, and I would be more than happy to take 100 pip profit rather than wait to extract the last pip from this particular trade. Hope you all enjoy this presentation. I will update you all with a video on how this trade materializes, if it actually does. Thank you for joining in. Bye for now.